Welcome to Financial Garden Live, where we plant financial seeds every week so you can grow in our 6 areas of focus. Emotions and money, entrepreneurship, budgeting, banking, debt fundamentals, and investing. I'm your host, Tasha Danielle. Let's dig in. Hi, everyone. Welcome to Financial Garden Live. Today, I'm doing a solo episode, and I'm going to be talking about investing in the stock market. I get asked all the time, how do I get started with investing in stock, and what should I look out for? Should I improve my credit first before I start investing? I get asked a lot of different things as it relates to investing in the stock market. So I wanted to take some time to go over some basics with you all. So please make sure if you have any questions, you leave them below. If I don't know the answer to them, I will get back to you. When you go live, you can have brain fart sometimes. So I'm not gonna sit here and like I have all the answers in one setting, but feel free to leave comments or questions as I'm going along different things. Before I dig into the details of everything, I kind of wanted to just throw a disclaimer out. This is for educational purposes only. In no way am I endorsing any of the funds or companies that I talk about during this live, nor am I giving you specific advice for you to do. This is all general information that should be taken so you can digest it and figure out what will be the best option for you. Okay, so before I even start talking about investing in stock, I want to talk about one thing first. I want to share one thing, and that is stock investing or investing in the stock market is not the same as gambling. I know some people think that if I put $100 in the stock market and today, that next week it should be $10,000. I wish the stock market really worked like that. This is not a get rich quick type of thing when you are investing in the stock market. There are things that you can do for cash flow, such as investing in learning about stock trading or day trading. And that's definitely different from long-term investing. So when people come to me and say, what should I invest in? What should I consider investing? I'll always ask them, like, what is your goal? Are you looking for cash flow or are you looking for long-term gains? So if you're looking for cash flow, I always recommend understanding how day trading works. I don't do day trading. That is not my expertise. I'm not saying that going through the basics. I'm going through the very basics with you all today, that I am some guru in investing in stock. I am just simply sharing like the one-on-one, like the things you should know before getting started or common questions that I get asked. So day trading, some good resources to understand about that is Tila Holcomb. She left her 9-to-5 doing day trading. And that is a lot to learn. Like she has goes through simulations so people can understand really how to get involved with day trading. That is completely different than what I'm going to talk about today. Also, I get asked a lot, what do I think about Forex? Now, this is a loaded question. Forex is nothing new. It's invested in the foreign exchange market. I don't have any experience in that, but I'm also asked a lot, what are my thoughts on it? And it's becoming popular right now because there are multi-level marketing companies that are a part of Forex. And so people are thinking it's something new. Forex is definitely not anything new. And my thoughts are, if you are going to get involved with Forex, with the multi-level marketing companies, make sure you do your research. If you simply YouTube some of these common MLMs on Forex, you will get some pretty detailed reviews on what their outcome is. I'm not saying all MLMs are bad, nor am I saying that Forex MLMs are bad. I know people who are in Forex MLMs and it works for them. But I want to say, when doing any MLM, especially Forex, are you learning the market or are you spending time building a team and telling people to DM you or trying to show that it's some amazing lifestyle that you're missing out on versus actually learning about the stock market. Learning about the Forex trading market. So that's my disclaimer on Forex. I'm not talking about that here, but those are my thoughts on it. Do your due diligence before getting started with anything. And if you, again, have questions, make sure you drop them in below. You'll see me looking down because I'm going through, look for comments and to keep on point with my discussion topics for today. First question I asked, should I invest while paying off my debt? Yes. There are so many different ways to invest. You can consider investing in real estate, in the stock market, or actually investing in yourself to get a new skill to increase your income. So that is, again, another loaded question, but a lot of people are really talking about investing in the stock market. Yes, your 401k is investing in the stock market. And a lot of times your employer has a match associated to how much you invest in the stock market. So for example, your employer could say for the first dollar that you invest, for every dollar you invest, we'll match it 4%. So if you don't invest in your 401k in your company, at least up to the company match, like 4% of your salary, then you're leaving money on the table. So if you make $100,000 a year and they say they match 10%, they're looking at your total compensation package as $110,000. So if you don't invest in your 401k, you're leaving that $10,000 on the table because that's what they want to match and put into your 401k. So even when paying off debt, I do advise people to at least invest into your 401k. I'm speaking from experience. When I paid off $80,000 of debt before the age of 30, I was investing in the stock market through my 401k. And if I did not do that, if I didn't invest in my 401k, I would have left $40,000 on the table over time. So it took me a little over 3 years to pay off my debt, the $80,000. And in 3 years, with me putting in my money in my company and my employer matching it, it would have came up to around $40,000. So I actually looked at my statements to figure out, like, what would I not had access to if I didn't invest during those years of paying off my debt. So doing a quick and dirty calculation from looking at my statements, I realized that I would have missed out on $40,000, actually a little over $40,000 in my money, if I didn't invest in my 401k during my journey of paying off debt. So that's something that you should consider, at least investing into your 401k while you're paying off your debt. I want to make a lot of money. How do I pick the best stock? If we knew the answer to this question, we will all be rich. There's so much money in speculating about the stock market. Analysts, the people you see on CNN, so many news outlets and resources spend their time saying what stocks are on the rise, what industry should you be looking at. That's all speculation. And if we all had a magic wand, we would know that Kodak yesterday, we would have knew that Kodak was going to go up, 1,200%. People made millions yesterday if they had Kodak stock. Excuse me. Kodak broke records yesterday. Oh my gosh, I'm stuck in my throat, but they broke records yesterday. They actually tripped circuits. Yes, tripped like 3 major circuits because their stock skyrocketed. That does not happen every day. And I think when people see those headlines, they think, oh my God, now is the time to invest in the stock market. When in actuality, you should always be considering or getting started with investing in the stock market. So don't let those headlines grab you and make you feel like, oh, it's too late. I should have did it yesterday. You can start investing right now in the stock market. So what analysts look at when determining if a company is something that's solid or on the rise, they look at various ratios. I'm not going to go and do any examples this is a live podcast, not a one-on-one college class. So I'm just going to say some ratios are debt to equity ratios of the company. What is their profit margins? All those type of margins or ratios are looked at by analysts to determine if a company is solid or if they're stable. So when looking to try to figure out if a company if I should invest in a company, you may not even know what these ratios mean. So what I tell people is, what do you like? If you are going to do individual stock investing, I'm going to talk about fund investing in a minute. But if you are interested in buying stock, what should you invest in? What products do you use all the time? So if you like Nike, maybe consider buying Nike stock. So when you buy individual stock like this, you're not going to get rich in a month of the year, unless you had Kodak, or unless something major like what happened with Kodak happens with Nike or whatever company that you decide to pick. It's usually just buy and hold. You make your money when you sell the stock. So what companies to invest in, it really depends on you and what you're looking for. But if you Google most stable companies that have the most return over, annualized return or just best return over the last couple of years, or what companies are able to weather the storm during the recession, those are good companies to look at for a point of reference and what companies you should be looking in to invest. So I don't know what happened. I'm started coughing and I'm I needed some water for a second. Is there a right amount to invest in stocks when starting? It depends on your budget, Natalie. So if you are paying off debt and you say, I want to invest, and at least invest up into your employer match in your 401k. That is a good way to do it. If your employer doesn't have a 401k and you're okay, now what's a good rule of thumb? Roth IRA. And I'm going to talk about that in a few minutes, but consider opening up a Roth IRA. So stay on, because I'm actually going to be sharing my screen and going through how you can actually open up your Roth IRA. Because I know when people listen to me talk or they watch any YouTube video, it all sounds good in theory, but you get stuck. Taking that first step of Googling how to open an account or what to do, people don't even get that far. So stay tuned. I'm sharing my screen on how to do it. But a good rule of thumb is if you are investing into your Roth IRA, I think the limit is $5,500 for the year. So divide that over your pay periods and see if that's something that you can maintain. If you want to just say, that's still above what I can afford, look at investing $50 a month, $100 a month into a Roth IRA. Or if you look on Robinhood or Webull, you can buy stocks from there too. So I'm going to cover all that in a second. So I kind of touched on this already, individual stock investing. That's one way to invest in the stock market. You can do that with apps right now like Webull, Webull, like Webull, Robinhood. Those are some apps that you probably heard of. You see a lot of it, especially if you're watching this live now. You're probably going to start seeing sponsored advertisement for these different companies that offer ways for you to invest in the stock market. So how does that work? It works as quickly as you download the app, you register. You have to be 18 years or older to invest in the stock market. And you hook up your bank account and you decide how much you want to put in. So, for example, if you say, I have $100, you can put $100 in Robinhood, and then you can see what stocks you can buy. So I love Dollar General. I think Dollar General stock is a little over $100. You can buy one share of stock that way and just kind of get a better understanding of what it means to be a owner of a stock. You can see if it goes up and down throughout the day or over days. The other thing is with individual stock investing, I had mentioned this before, it's not a way to get rich, and it's very it's a little bit risky if you just buy individual stock because you're putting all your eggs in one basket. So if you have $10,000 and you're like, I want to invest in Apple, I'm going to buy all Apple stock with my $10,000 because Apple has steadily been on the rise. There's nothing better than the iPhone. I know some iPhone elitists. That's why I'm saying that Apple is just the thing to do, right? So you put $10,000 in Apple, and then Apple has horrible, their phones start blowing up or something crazy happens and their stock value starts to go down. You can lose all your money by putting it in one stock, buying only in one company. So I want to point that out too. If you are investing in your 401k, make sure you're looking at your statements, because a lot of times your company defaults to most of your stock being with that company. So if you work for Pepsi, there's a good chance if you haven't looked at your statement or made any allocations, which is moving, deciding how you want your money to be distributed in different funds, it's a high chance that all your money in your 401k is with the company that you work for. So that's another reason to look at your statements in your 401k, because it can be treated like individual stock investing. So that's what happened with, if you think about Enron, that happened a long time ago. But when Enron went under, a lot of people had most of their stock and their 401k was with Enron. So when Enron collapsed, they lost their 401k because most of their money was with Enron and their 401k. So that's just a tip for you to do immediately after this live, is to look at your 401k statements. If you have any questions, make sure you drop them in. If you know people who are like, oh, I'm gonna invest this year, tag them, share, show me some love, drop some hearts in the comments if you're on Facebook, and definitely tag some people if you're on Facebook watching as well. So individual stock investing is a lot of the headlines that drives emotion that you see. So when the coronavirus first happened in March, a lot of government officials had moved their money because they had insight into what was coming. They knew the market probably was going to go down, so they moved their money out. So unless you have insider trading like Martha Stewart, which is why she went to jail, of what's happening with the company, you really don't know what's going to happen. You can look at past performance, but that doesn't guarantee what future performance is going to be. So that's another reason, if you have individual stocks, it makes it risky. Some benefits of owning individual stocks is that you can vote on different things in the company. You can vote on the board of directors. So there's been a lot of talk going around as far as like, where are the Black people on board of directors, with companies saying they were staying in solidarity. It's like, where are the Black board of directors? Stockholders, investors in the company can vote who's on the board. Now, I'm not saying that if you own one share of stock that you can just change everything, but I'm saying that is how things happen in companies. Shareholders are able to vote on initiatives or different things that's going on in the company. So that's one of the benefits of owning stock, individual stock. So if you have questions on that, let me know. So I already said you can purchase the individual stock from on your app, Webull, Robinhood. Those are very common, but you also can purchase individual stock online as well through like Fidelity or Ameritrade or stuff like that. Another common question is, should I give my money to someone to invest for me? Unless it's a broker, no. So a lot of times people say, oh, I know someone, a friend of a friend, they're making a killing in the stock market. I seen their screenshot of them doing really well in the stock market. I don't understand it, but they know it. You could think like, oh, well, this person is a CPA like me. Like, I'm gonna give Tasha my money and she can invest it. She knows. You don't want to have that handoff approach with investing, because if you give me my money, give me your money to invest, who knows if I'm actually going to invest that money. I mean, I'm a CPA, so I have a fiduciary duty, so I wouldn't want to mess up my license or anything like that, but I'm not a broker. But I wouldn't want any drama with someone saying I took their money to invest it. But say if I didn't have a license and you give me money because I, quote unquote, I'm a financial expert, I know what to do with money, and the stock goes up, now what do I owe you? What you gave me or what the gain was? Like, so if you're going to invest your money, it needs to be with a broker. If you want to pull your money together, let's invest. We're stronger in numbers. I agree with that. Then you want to formally start an investment club. So when you start an investment club, it should be a legal entity that's formed. So if it's you and 9 other people that want to put their money together to buy it, because you have more money to buy stock and make your decisions, you guys need to set up an LLC or a corporation or something. You want to make it a legal entity so it's clear who has ownership rights, and how should everything move in that investment club. So don't just give somebody $200 or whatever because you heard that somebody else said that they are making money in the stock market. That's just not the right thing to do. So if you have comments, definitely drop them for me so I can answer them. So I'm kind of going through common questions that I am asked, and that is a common question that I am asked. Who should I give my money to invest? A broker. Go online, open up a brokerage account, or a actual stockbroker in person. Where are stocks traded? Now, I think there's 13 stock exchanges in the US. The biggest ones are NASDAQ and the New York Stock Exchange. So those are the main ones you'll see on headlines, or when you are watching the news, when you see stuff scrolling at the bottom of the screen, the stock market throughout the day. Those are the two main stock exchanges, and that's where stocks are being traded. When I say traded, that means buying and selling all day. So when you see a company stock price go up and down throughout the day, people are buying and selling stock. So there's so many different things that can drive a stock price to go up. Speculation, like with Kodak, of something big happening, that can drive a stock price to go up or down. But the actual stocks themselves are traded on stock exchanges in the US. So now I talked about individual stock investing, and that is buying a share of stock on Webull, Robinhood, to whatever your favorite company is, whether it's Nike, whether it's Coach, whether it's Macy's, Domino's, DTE. Those are companies that you can buy stock in. So you can easily deposit your money from your checking account, or your money in your checking account could be linked to those apps to start investing right now. If you are like, I didn't think about it could be risky for me buying one stock and putting it all into one company. How can I make it a little bit more safer, a little less risky? That's where mutual funds, ETFs, and index funds come into play. Now, I have a bad habit of saying that they are all the same, and they're not. But the reason why I say that they're very similar, and I kind of group them together, because they are similar in the fact that there are a mix of stock in each one of these categories. So I'm going to start with mutual funds. A mutual fund is a mix of companies, such like stocks, I should say, stocks of companies, bonds, money market accounts, and other like commodities that make up that fund. A mutual fund is created by a fund manager. So this person is an expert, and they are claiming that they know how to pick the best stock to beat the market. And you should put your money with them because they know what they're doing, and they're going to create a fund. That is what a mutual fund is. Is it better than buying individual stock? It can be, because if you bought Apple individually and Apple tanked, your $10,000 is gone. But if you put the $10,000 in a mutual fund, you should not lose all your money unless the recessions happen at one time, because there's other stocks in the mutual fund that can make that risk a little bit less from you losing your money all because the company went under, failed, or whatever. So that's why people like mutual funds, because there's a mix of companies and bonds and money market accounts. Money market is just cash. That makes it less risky when investing in the stock market. I have heard a little bit about the Cash App stocks. I'm not too familiar with what that is with Cash App, but I know personally investing in like the app, as far as Webull and Robinhood, you're not investing in the app, you're picking stock to invest in. So I'm not sure if you're talking about actually being able to buy stock on Cash App, or are you talking about buying stock in Cash App, the company, which I think the parent is PayPal anyway, I think. So let me know, Trinity, are you saying buying stock in Cash App, or there's a way you can buy stock within the Cash App app? Because I'm not sure what you're asking, but I will say that with mutual funds, so that's the difference between buying individual stocks in investing with a mutual fund. Now, ETFs are exchange traded funds. They are they can be like a mutual fund. And let me back up. ETFs are cheaper than investing in mutual funds because it's not actively managed. So ETF does not have a fund manager associated with it. So there's not going to be as many fees when you invest in an ETF. And ETFs can be broken down into ETF index. I know I'm playing alphabet soup. So if you are like, what is she talking about? I will show you on my screen in a minute, because I know people like, okay, look, we just talking about stock right now. Now you're talking about mutual funds, ETFs, indexes. I never heard of this. Just think of ETFs, exchange traded funds, as being very similar to a mutual fund, but it's not being managed by one person. It's kind of robotic in the fact that it is managed through kind of like, lost my train of thought of not gonna say computers, but it's just like trends. It's based on trends and different analytics that are making up what's in this ETF. An ETF can be an index fund, which I'm gonna talk about shortly, or it can be based on equity stocks or industry. So ETFs can vary differently. What does the Apple stock split mean for those looking to buy Apple, i.e. potential lower price point? What is it? You're talking about regular Apple stock split mean for those? I actually, Janae, I don't know how to answer that question. Looking to buy Apple. Where are you looking to buy that stock at? So you're talking about stock splits. Are you saying that's what you're considering about? Yeah, I can't even talk. Thinking about doing, instead of doing it buying it individually, let me know. So I'm jumping around trying to make sure I'm hitting everyone's question in here. Going back to the topic. So, and then index funds are, think of it like a group of things that are put together that are similar. So if you had SUVs, you would put Ford Edge in there. You would put Equinox, a Terrain. Like those things are all similar. So they're housed under the SUV category. The index may put together a group of common companies. So S&P 500 is a common index. And S&P 500 has the largest the top 500 companies on the stock exchange are in this index. This means that these are the top companies, and this index is kind of indicating what the market is doing. There's over 2,000. Oh, sorry. There's over 2,000 companies on the stock exchange, and when you have an index, it's saying we're taking this subset of companies and saying that this is the best of the best, and this is what the market is going to be doing based off these top 500 companies. That is one example of an index. Then you have like the Dow Industrial Index. I think that's like the 30 companies based on various things. So you have indexes that are like subsets that are looking at that are pulling companies together based on certain criteria. So index funds are more recent. They came about, I want to say, like in the 70s or 80s, and it sounds very similar to an ETF or a mutual fund. Index funds are not managed by a person either. You met with Cash App, Trinity? That's fairly new. If you can buy stocks with Cash App, that is an option if they have that feature on there. And it should be similar to Webull and Robinhood. I'm more familiar with Webull and Robinhood because I actually use both of those apps. I have not used Cash App to buy stock. So if there's options to buy stock with the Cash App, I'm assuming that it is, I know it has to be legit if it's through Cash App, ways of doing it and securing it. So you should be able to transfer your money from your Cash App account or your checking account into being able to buy actual securities, which is shares of stock from whichever company you want to buy them from. Yeah, okay, I got you. Because I was like, when you said Cash App stock, I didn't know if you were saying actually buy Cash App. So I'm gonna just share my screen for a second to kind of go over like how to get started. Because like I said before, it all sounds like, okay, she's saying all these words, but okay, how do I actually do it? If you decided, okay, I really don't want to buy individual stock, that doesn't sound right for me. I want to actually open up a mutual fund. Mutual funds, to me, if you want to open up a mutual fund, I would go with an ETF or an index fund, because mutual funds have a lot of fees. They are managed by an actual person, but there's more fees associated with it, and you can get the same type of experience with the index fund. An ETF is actually an individually traded stock that models like an index fund. So I'm going to pull up Ameritrade just so you all can see how to get started when you go to a brokerage website. And a lot of people, I think, are like, don't even want to Google where to start with investments because it's so overwhelming on how to get started. So let me go back to this homepage, and I'm going to share my screen in 1 second. There you go. Okay. Okay, so this is TD Ameritrade's. I want to pull this out so I can actually see what you guys are seeing too. So if I go to their homepage, this is like a big brokerage account. I don't use TD Ameritrade, I use Vanguard, but I do like the way this is more user friendly with going on. I'm going to share Vanguard in a minute. But if you go to investment products, you'll see all the things I just talked to you guys about. Stocks. I didn't talk about options. Let me say some of the things. Options, ETFs, what I just explained, mutual funds. You see futures, Forex. I kicked off saying Forex. So again, Forex is big right now because of multi-level marketing companies really pushing it. But if you go to TD Ameritrade, which is a big brokerage firm, has been around for forever, there's information that you can get for free if you click on that link. I do it here for you. It kind of walks you through some trading that you can do before opening an account with them. Margin trading is basically you can borrow money to invest in the stock market. Cryptocurrency, all the various ways of trading, if you trading in the stock market, are listed under their investment and products. So if you click on any of these things, you can see, okay, well, ETFs, she mentioned that. Let me see what that is. And you can go, and then if you go and open your account, let's just see what that looks like. It's giving you the different options that you can do to open your account. So you see individual brokerage. If you do individual brokerage, it's giving you a hint that this is not a tax advantaged account. It's not an IRA. So it's basically saying that this is individual brokerage. If you want to open it up an ETF, it's saying you can open up an IRA and do it that way. You can open up a Roth IRA. So when I say Roth IRA, a lot of times people think that's individual retirement account is what that stands for. Why would I open up an individual retirement account to start investing? The reason is Roth IRA is because you can contribute whatever the max is. I think it's $5,500 for this year into your Roth IRA, and you can take that money out whenever you want without any taxes or penalties, just like you would in any brokerage account. But the earnings that you make on your investment have to stay in there until you are retirement age. So if you're thinking like, oh, I don't really want to lock my money in somewhere, all this is confusing, the Roth IRA is set up for you to contribute so much a year. And this ETF and the mutual funds and index funds that I'm talking about, you see right here, when you want to open those up, you can start it by actually going open up that fund within an IRA account, or you can just open up individually. Again, this is the benefit of pooling your money, like not pulling your money together, but if you want to mitigate risk by instead of buying individual stock, this is another option for you to do that. So I just kind of wanted to share what it looks like when you go to the web page of somewhere and you're like, I don't know where to start. It seems a little bit overwhelming. It's videos there too. I just didn't click on it because it would have routed and started playing. But if you're like, okay, you heard the word, you heard me saying it today, and you want to learn a little bit more about it, you can go to these sites, the brokerage sites themselves, and they will have free learnings on there for you to do. So there's a lot of courses and stuff that you can pay for to learn from it. But I always advise people to at least learn the basics from what's available online through these brokerage companies that you will buy the stock from anyway. So if I had a class on teaching you how to buy stock, you would not be able to buy the stock with me. You would have to buy the stock through a brokerage. I'm not a broker. So you would have to go through one of these firms anyway, not firms, one of these brokers anyway to buy stock. Regarding the news announced today. Okay. I think I know what you're saying now. Apple must have issued more shares. And when a company issues more shares of stock, it splits the value of what the current stock is out there right now. So yes, we would like to buy individual Apple stock. So Janae, you can buy individual Apple stock. It's funny because I kept using that as my example. You can buy that from Webull or Robinhood or open up an individual brokerage account to buy it. As far as the split, I'm not aware of what happened today. I was not looking at the news. I knew about Kodak, what happened yesterday. I know that was crazy. But if a stock split happened, I'm assuming they must have issued more stock, and you're looking at, or something along with that, something else happened with Apple that makes you want to buy into that stock. So if you want to buy the individual stock, you can do it on the apps, like I just said, to do, and you will pay per share, whatever the price is per share today. So I'm not sure what happened today in Apple. I'm gonna get my Googles going today after I get off the live here to understand what really happened with Apple. But that's where you can buy it. So even if you go to Apple, if you click, I think if you go down like in About Us or Contact Us or whatever, if you want to buy shares of stock in Apple, it's going to route you to a place where you can actually buy the stock itself. So again, if you want to buy individual stocks, it's not like a get rich quick type of thing. You're holding it for value for it to go up. So think about it. If you, like, I invest in real estate, not because I bought the house thinking that in 10 years I'm going to be able to sell a $60,000 house for $200,000. No, I bought that house strictly so I can get $1,000 a month in rent. So I'm looking at it from a cash flow perspective. And it's the same thing you have to think about with stock. So if you're buying Apple, I'm definitely go buy your stock, get it done. But when you buy Apple, you're buying it for it to appreciate over time probably, but it's not going to just skyrocket overnight or next month. You're kind of like in a buy and hold situation for buying the stock. So another thing that happened with when the coronavirus happened, the market tanked. A lot of people are like, oh, I'm taking my money out of my 401k. I'm taking my money out of stock market. Like, you're losing money. That's an emotional decision. The stock market is always going to go up and down. So expect that if you buy stock right now, when the next wave comes, it's going to be a drop. So it happens. But guess what? It's going to go right back up. A lot of people were like, I'm taking my money out of my 401k. I'm like, to do what? To put it in a regular checking account, like to put it in a regular savings account, it's going to go up and down. Now, if you are investing for the long term and you want to make sure you want to protect it, then yeah, if you're retiring, then yeah, move that money out now. Like, it's going to keep going out, like not move it out the actual 401k. It should be in a low risk area account anyway. It should mostly be in money market accounts, which is basically cash, because you're going to retire in a year or two and you don't want to take the risk of losing all of the growth in your fund. The same thing if you were investing for buying a house or whatever. I wouldn't have it so risky right now with what's going on in the market. So people were like, it's like buying stock on sale when coronavirus first hit. Not everybody, a lot of people bought stock when the market went down. Airlines, stock value, market, I'm like fumbling my words. The airlines stock price went down, but some of those airlines are creeping back up now. So if we are predicting to have another wave come through and probably more layoffs going to more shutdowns and things like that, you can call it a stock market sale. It's probably coming. Like, I don't tell people to invest like based on speculation, but I mean, it's pretty clear that we're going to have another wave. It's going to get worse. It's already getting worse in other states. So the states that are opening up, probably going to close. People are going to be losing their jobs. So stock prices are going to go back down. Don't freak out and move your money because it could go down or whatever. The vaccine also just came out apparently yesterday or this week. So that could change things too. So a lot of things impact what's going on with the market, but the stock market kind of bounced back a little quickly from the big drops they had. But that's all a part of stock market investing. If you know what's going on ahead of time, that's insider trading, and it's I think it's a felony. I think it's a felony for insider trading. You just invested in, okay, Tia, go ahead, invest in Amazon. Yeah, like I said before, I have money in Webull and money in Robinhood. Robinhood can be glitchy, more so than Webull, which is why I started buying individual stock in Webull in the app. And you can buy it on the computer from brokerage firms, but if you want to see yourself on the computer in those apps, you can't. A lot of people are using their phone anyway. But that's what I want to say. I'm glad you guys are buying stock, but also consider index fund investing. Also, and consider if you want to get an ETF, because index funds are less risky and they tend to have better returns over time than you buying individual stock. So the S&P, if you had an index fund, like the index fund for the S&P 500 index fund or Vanguard, Amazon, Google, those stocks are in that fund, and you can get the same type of long-term returns that you would if you had just bought them individually. You will get similar of it. So don't steer clear of mutual fund ETFs or index fund investing, because it's a great way to get more of a return long-term. So one thing I want to mention, since I talked about investing for cash flow purposes, stocks pay dividends. So dividends can happen when a company says that we're going to pay 50 cents per every share, for every shareholder. So if you have per quarter, I should say. So if you have 1,000 shares of stock over the quarter, and let's say Amazon says we're going to pay 50 cents for every share that you have quarterly as a dividend, then you would get a check for $500 every quarter, because that's their dividend. So a lot of people look for companies that offer dividends because that's cash flow to them. So a lot of people in retirement invest in the stock market for dividend purposes. Now, the companies that pay dividends are usually not the big companies like Amazon and Google. They're usually like the stable companies that tend to pay dividends over time. But again, it's always dependent on what's your goal. I want you to get started. So whatever is going to make you get started, do that. But then think about, how do I chart out to make money in this? Like, what do I want that to look like? So if you have any questions, like I said, drop them below. Janae, I got to see what happened with Apple, because I want to like look at it now and see what happened, because I'm like, what happened with Apple today? This announcement, I didn't see what was going on with Apple. So my apologies in not understanding that question. Also, if you are learning some stuff tonight, make sure you're dropping some hearts, make sure you're tagging people, make sure you're sharing this live video. I go live every Thursday talking about finances, just because I think it's so important for everybody to be empowered and not be scared to get started with investing their money. So Natalie, I know you asked me about how much should you get started in investing in. Let me know if I answered your question, because again, you see like Tia, she just invested in Amazon, and Janae is buying Apple stock. So they're probably buying it on an app. So it also just depends on how much money you're working with. So I think I covered everything. I think I threw a lot of terms and different things out there. But if you didn't know anything else today, I want you to definitely look into index funds and ETFs more than anything, because that is where a lot of people start generating their wealth for the long term, is by investing in these funds. Warren Buffett said that the best thing you can do is to invest in an index fund or a mutual fund index that is tracking the index, because they tend to have greater returns over time. So just, if you don't know anything else, please look more into index funds and ETFs after hopping off with me today. I want to just touch on large cap, mid cap, and small cap funds. These are the things that you would probably see in your 401k accounts. These are various things. Large cap usually means a company has a value, a capitalized value of $10 billion or more. And mid cap is 2 billion to 10 billion. They're not over that 10 billion mark. And then small cap is anything less than that. So with those different funds comes different variations of risk and returns. So the higher the risk could mean higher the return too. So there's so many things when it comes to investing. So I'm so glad you all tuned in. If you do not have any more questions for me or comments, I'm going to log off. But before I do, 10K with Amina, if you do not know, 10K with Amina is Financial Garden's mission to teach 10,000 kids about kidpreneurship. I wrote a children's book that walks through how to start a business and how to reach a financial goal for elementary students. So head over to financialgarden.com to get your signed copy today. And I will see you all next Thursday. If there's no more comments, which I don't see, thank you for tuning in. Bye.